All right, guys, this is a big question. Okay, do institutional traders use technical analysis, right? Every retail trader who never steps foot into an institutional organization, a professional trading organization, will always have in the back of their mind, they'll be questioning, okay, do professional traders use technicals? And if they do, to what capacity? And so I've done a lot of research on this. I've been inside of these organizations, and I'm going to give you guys an idea to what capacity institutional investors use technicals and how. All right, let's roll the intro. He's a pattern man, but he doesn't ignore the fundamentals.
Another episode of the Love and Hustle Show.
All right, traders, what's going on? Welcome back to the channel. My name is Cleveland. I like to do deep dives in financial markets, okay? Most channels on YouTube, they merely scratch the surface and look at price action, and you can find a million price action channels, but there aren't a lot of channels that give you the guts of what the financial markets are all about, and that's what I do here. So make sure you guys subscribe if you like the video and if you jive with what's going on, okay? So a lot of people know me for really doing a lot of thorough analysis from a fundamental perspective with Forex, stocks, things of that sort. But one thing I haven't really tackled is how are institutional traders, okay, at these larger organizations, JP Morgan, Morgan Stanley Wealth Management, Bank of America Wealth Management. These are firms that are very, very local here in my city. And I know a lot of different buddies of mine who work at these organizations. I went to school for finance investment management. I was on the portfolio management team where we were managing a real $500,000 of capital back in university. I went to go on to work at firms. How much are these organizations using technicals, right? So first things first, I want to talk to you guys about what technical analysis is. I know immediately a lot of you guys are like, it's the study of price, okay? Whenever you pull open the charts here, and the second you start meandering around and trying to figure out what's happening in the chart, you're doing technical analysis, okay? And these charts can give you a lot of data. They show you a lot of what's going on as it relates to how time has elapsed and how the price of this particular asset has changed. And that's awesome. But there's one key thing that most retail traders are missing, because again, 95% of retail guys are not paying attention to fundamentals in any capacity. They're told to avoid the news, right? They're told to stay away from any kind of economic calendar events. And they're basically told that anybody on CNBC and Bloomberg are absolute morons. Here's the thing, okay? We had multiple 7-figure and 8-figure fund and 9-figure fund managers on the channel last year. Michael Pinto, okay, we have Catherine Bentz. She used to work for $1 billion organization as it relates to money management. These are people in my social network. We communicate on a consistent basis, and there is oftentimes a dialogue about what's happening in financial markets. And again, not every moment we're like, well, what kind of chart patterns are you seeing? Okay, that's the disconnect right there. Most retail traders are only communicating about what's happening on the chart. Meanwhile, institutional firms, institutional organizations are using fundamentals. And there's a reason why. Fundamental analysis and fundamental data gives you one key thing, and that's value. Technical analysis gives you price. Right here on the chart, we're looking at the price. This is the New Zealand dollar, but we can look at anything. We can look at the euro, USD, doesn't matter. Any currency, any stock, we can look at anything. Right now, we see the euro USD is selling off quite dramatically. Now, if I was to ask you, okay, the technical guy, why is this euro USD selling off? Many retail guys, all right, again, we should do a survey on this. But many retail guys would believe that, oh, well, maybe it's coming to a head and shoulders pattern. Right? Or maybe support, it hit off on this resistance level and it's getting rejected at that resistance level. That's why it's selling off, Cleveland, obviously. Okay, I mean, how do you fight that? What I realized is you don't want to get into those arguments, because when you're a technical person, you can come up with any reason as to why the market's selling off. But when you look at things from a fundamental perspective, there aren't that many reasons. There are only so many ways that markets can decline as it relates to maybe this euro USD selling off right now. The first thing I would ask a retail guy is, okay, again, which currency is selling off? The euro USD, you're looking at the euro, you're looking at the US dollar in the currency pair. What currency is selling off right now? Is the euro getting weaker, or is it the US dollar getting stronger? Well, again, they're not going to immediately know, because the context as to how they've gotten involved in Forex in general, and again, this applies to most markets, is a little bit off, okay? So the first thing they need to try to understand is each currency independently. And then once you start looking at each currency independently, then you start to really see how that economy is moving in isolation. Some people like to go to the dollar index, But one thing they don't realize about the dollar index is the dollar index, the Bloomberg dollar index, the most popular dollar index, DXY, okay? It has a 52% euro component. So what that means is whenever we pull up the dollar index, you guys can see here that our dollar is growing in value right now. Okay, so that's good. So that means if we go and look over here, oh wait, this just looks like the inverse. When I look at the Euro USD, and then when I look at the DXY, it literally looks like the exact same thing, just flipped. All right, and so I'll do some, funky magic here, and I'll kind of compare and contrast these two so you guys can see. But they literally look the exact same consolidations, right? September, October, you see this consolidated area here. Well, we can go back. Guess what we get? September, October, you can see some consolidation. It's just flipped. And that's because that euro component is weighed too heavily. So you have to create, or you have to have a dollar index that looks at the dollar and equally weighs all of the other currencies across themselves. And again, I know we're talking about, do institutional investors use technical analysis, right? I'm getting to that. What I'm basically saying is, yes, they do, but they do it in a completely different way than retail guys. Okay, most retail people simply just look at each currency pair almost in isolation, where they're like, oh yeah, my favorite pair is this. Oh man, I love the GBP JPY. That's my thing. The way it moves, all these things. Okay, again, that sounds nice. You can start to formulate all of these different rationales and hypotheses as to why it moves so fluidly, but at the end of the day, it doesn't technically make sense because there's the pound and then there's the Japanese yen. Yes, for sure. If you combine two different currencies, they may have tendencies as to how much volatility each currency has, but that's probably just because you're matching up two currencies that are very volatile in nature and you're combining them together and you're just getting a very exaggerated price move because those two currencies are now combined. And you may be able to say, well, yeah, that's represented by that particular pair, but it's bad when you think of things in that capacity because you start losing opportunities because you don't look at the currency in isolation. This is the way most institutional guys trade. I have a buddy over at SunTrust, and they were the ones that gave me the idea about 4.5 years ago to make an index for each individual currency. And that's what we did. And that's what everybody in our boot camp uses today. We only look at each currency individually. And that's helped traders who otherwise were doing things just the good old retail internet baby pips way transition into actually becoming fairly profitable and some extremely profitable and consistent traders because, again, it's all about dedication. It's a business at the end of the day. How much time are you putting into it? Okay. So again, I'll backtrack. Do institutional traders use technicals? Yes, they do. But one key component that institutional guys pay attention to by far more than retail traders is fundamentals. Fundamentals give you the value of an asset. All right. Technicals give you the price. You can simply think of this as a piece of art. OK, I might show you a painting here and say to you, hey, how much do you think this is worth? You might not know who painted it. You might not have any idea about art history, or you might not be an art enthusiast. You say, I don't know, man, I'll throw you $1,000 for it. Little did you know it was a Van Gogh and worth $250,000. So you threw me a price because you were a what? You are an uninformed market participant. You're not in the art market. You're not a buyer and seller. You're uninformed. So all you could do is what? Throw me a price. That's your technicals. When you are a value investor, when you have an idea from a fundamental standpoint what that piece is worth, you get better appraisal. That's all I'm trying to help retail traders understand. Many retail traders think I'm attacking them because, oh yeah, sometimes I can kind of get a little bit one-sided where I'm like, technicals are stupid, technicals don't work and all that stuff. Guys, technicals are extremely important. Technicals play a key role in every institutional trader's trading methodology. But the most important thing is to understand the value of a particular asset. When you have the value of that asset and then you see the price of that asset and you see that there's a misalignment, guys, that's a trade, okay? That's what anyone tries to do in any situation, whether it's real estate, whether it's buying jewelry, whether it's collecting cars, it doesn't matter. Game cards, NFTs, okay? You want something that is priced incorrectly based off of its value. So when you trade in financial markets and when you're looking at potential trading opportunities in Forex, stocks, whatever it is, it does not matter. Your job is to rationalize and see, okay, the price is here. Everyone can see the price. There's no edge in seeing the price. Yes, you can try to mark up all you want and draw all these little lines on the chart to try to get to what? To try to understand the value of the asset. That's really what technical traders are trying to do. Retail traders. The retail guys who are simply just marking up charts, okay? They're trying to determine value. The simplest way to determine value and to try to figure out why these prices are moving and such is to understand fundamentally what is driving markets. And there's 15 catalysts that drive currency markets. And we go over that in detail inside of our bootcamp. If you guys want to know all 15, all right there, smack dab in your face, they're all over the internet. But we have one central place where you can learn them within a 2 weeks time span. It's our 2 week, when there's different trade wars and things of that sort going on. Okay, those are one of the catalysts that drive markets. And if you can understand how those different events increase or decrease the value of certain assets, then you have an advantage. All right. So guys, technicals are so important. All right. Technicals give you the entry, they give you the exit, they give you the stop loss. You can't just simply say, hey, Cleveland, let's say me and you are at a coffee shop and you're like, hey, Cleveland, man, I really think that, we should be selling the Japanese yen. And I'm saying, okay, cool, let's do it. What's our next step? We got to go look at a price chart. We have to see if we're early in on this trade, right? We have to see how much potential there is to maximize profits. But technicals come second. The idea of basically taking that trade should come first from the fundamentals. Unless maybe you were looking at a chart, you saw a massive move in a price of a particular asset, a particular currency, and you said to yourself, whoa, what the hell happened there? You go look, you go try to substantiate that move. You don't think it can be substantiated based on its fundamentals? There you go. You got price and value out of alignment. All right. So this is the way the institutional guys go about it. Okay. They usually hold positions longer than the retail guy. That's also there. Okay. And there's many other variables also resource wise that institutional guys have. One thing though, also that institutional guys have is a mindset that's completely different from retail. Institutional traders, institutional traders, they come from a collegiate background. You have to. Okay. And when I was at Georgia State, there was this thing called Panthers on Wall Street. Basically, all the finance kids that were doing well, A's and B's and whatnot, got to go to New York City and see the stock market and go to the stock market and go get trained by different firms in New York for about 2 weeks. And guess what? One of the most important aspects of any trader's career or life is tutelage. Is finding somebody that can truly help them drive their decision-making process and their confidence in what it is that they're doing. Most retail guys do what? Most retail guys shame people who go that route of trying to find help and try to find mentorship. They're advocates of self-education. And self-education is awesome, but there's also foolishly and ignorance applied to many of the philosophies that retail traders have, as it relates to just doing it all on your own. Okay. There's no way in hell that I would be where I am today without a Rob Loud, without advice from a Michael Pinto, okay, without advice from a David Sergio. These are people that are worth tens of millions of dollars that when I was broke, when I wasn't making good money, okay, they allowed me to get in their situation, get under their wing, all right, and really start to increase my knowledge and guess what? My bank account, all right? And so when I started to put myself around high-level people, communicate with high-level people, work and see cash flowing with high-level people, that was another thing that just took me to a whole nother level. Okay. And before I was 23, I was making 6 figures. All right. And it was only because, again, I was able to get around smart people very early on because I knew that that was my edge. Okay. Retail guys, they want to figure it out all on their own. They don't want to communicate with anyone highly intelligent. They almost look at them as enemies, or they almost look down on them, or, they kind of say that maybe they're trust fund kids or whatever. A lot of people that are well off are very nice. You can figure out maybe if they have a program or they have a training, you get in with them and you can start to grow underneath them. That's so important. Okay. So there's a lot of mindset things that destroy the retail guy that I'm just here to help. All right. I don't want you guys to attack me. I don't want you guys to think that, I think I'm a know-it-all. I don't. But all I know is I was able to scale very quickly in my financial career and overall in my life because I did things the way that I saw successful people do it. I wasn't following some maniac who's trying to sell me some bullshit on the internet. That's what you mostly see here on YouTube and Instagram. All right. So I'm just trying to give you guys the information in a way that I feel that you can be a little bit more trusting, that you feel isn't out to get you, because that's what a lot of people are trying to do. They're trying to show you a lifestyle that's total bullshit based off of, who knows what. okay? And really just based off of doing what they know you want to see. They're playing into the weakest part of the human mind, okay, status, all right? So if they say you can get quick status, money, wealth, cars, all this other shit, they know that you're gonna fall for that because most simple-minded human beings do, okay? But no one on this channel is simple. All you guys are animals. I appreciate you guys for watching this long. Thank you so much. Give me your advice down in the comment section below. We'll love to hear what you have to say about this. Yes, institutional guys use technicals. They have to. They have to get in to the market, but they get a directional bias and they derive exactly what they're going to be doing in financial markets because they need to understand value and they get that value from fundamental analysis, okay? Both extremely important. Do not overstep fundamentals. Don't overstep technicals.